Hello and welcome to Caching Waves. This is an Elliott Wave update for MATIC. Now before I get into this count, I just want to show you again, because everyone's getting freaked out on that last candle, what we were actually expecting yesterday. And this is my last update. You're welcome to check it. I was looking for a spike down. And you're welcome to go check that. It was literally a day ago, looking for targets down between the 100 and 1.382 there, as you can see. Now I was a little bit aggressive with my trading because I wanted a really nice entry. I ended up buying right below this drop at that 618 extension I showed in the previous video, or slightly above. It might have been on a linear scale. Yeah, right above on linear scale. And I ended up getting stopped out by that wick. Now I did that to get a really good risk reward. And I know majority of the time we stop between the 618 and the 1-to-1 extension of this A wave off the B. So this was my zone here where I expected a nice big retracement and reversal to take off. Clearly that spike was much bigger than anticipated. I had my stop at this B wave, and I did that to get the best risk reward possible. This is how you can be right potentially on a trade but still be wrong by your stops and your setup. But the count is intact. Nothing has changed, as you can see. Exactly what we wanted to happen happened. So I'm just going to go out to the daily again and show you the options. It's a very ugly count, but I like this trade setup because it has three ways to get us to the upside. So I don't want to give up on this. MATIC is, I believe, going to take off to pretty high levels. But first of all, here's on the daily. This is an ugly count, like I said, but this is how you can count it as a impulse. We had our wave 1, wave 2, wave 3, very long wave 4 with an expanded X wave, and our fourth is over here, and we came up for our fifth. Very ugly, looks 3-wave, obviously, but it is valid. And then we have our wave 2. We pass through the 0.7, which is our minimum requirement to have this part of an entire flat. That's my alternate count. But the point of this is if this is a 1-2 and we have a 1-2, our third wave targets are up at $6.70, which is very good. If this is an ABC as a flat, like I mentioned, if this is 3-3-3, then we can have an ABC where we get 5 waves to the upside from here, up to 240 or 250 there. So this is why I very much like this count. Whether it's correcting or impulsive, both sides are pointing to the upside. Now, the other alternative, if this resolves to the downside and we just come up and keep dragging down to the downside, is that this could all be a triangle where we get our, since the high, A, B, C, D, E, and then we go. But that's something I would discuss if this current setup breaks down and we don't get anything out of it. So to discuss my trading plan here now, if I took the trade I suggest most people do, you'd be up between this area and your stop would have been at this level, the beginning of the A wave. So you would still be in this trade. I went a little extra and I put it a little tighter just to get a better position size, which I'm fine with. I even mentioned in the video, if I get stopped out, I'll look for a re-entry. Just trying to get as much position size for potential reward as I could. And that's where, you know, your trading style really defines how you trade. Are you risk adverse? Do you take more risks than others? There's upsides to both. But this is a very ugly wave, just like the previous. So you might want to lean to the fact that it's that corrective ABC. But we basically triple bottomed here. It's hard to say, okay, is this a leading diagonal up to here? And then we have our wave 2, 3, 4, 5 ended here, or did it end here? We have 5 waves here. Or is this an A wave and this is all a B wave? Or we get a 3 wave here. This is a 3 wave, and now we're taking off. So what I'm going to do today is I'm going to be looking for a trade setup to the upside. It looks like we need a little more time here. Yeah, there's not a lot there. I think what I'll probably do, just give me a second here. Yep, we're not to the 618 yet here. Sorry, just doing this in real time. I'm curious if we get another move to the downside. ABC. No. I think what I'm going to do, again, like I mentioned in yesterday's video, is take multiple shots at this. Just because that risk reward is so high up to that 250 area. Talking about a 300% move. So I am fine buying into this trade several times. This is just what I'm going to do. You do your own research. I just, for full transparency, this is what I'm going to do. Let me get rid of some of these target areas as well. The 618, the 1-to-1, so we can see it a little better. So we came to the 1.236, as you can see, the extension of that flat pattern. Just to go back, what we were looking for a 333 or a 335. This was a flat, came up right to the zone we would expect there between the 1.236 and 382, which was why we were expecting that move to begin with. If you understand Elliott Wave, if you get this move, we get a 3 wave right into our expanded area, we'd expect a move to the downside after, which was why we targeted that to begin with in the first place. Okay, so our options are, obviously we can get another wave down and make 5, in which case I'll be stopped out. And I'd look for an entry again to the upside specifically. We can also just have a WXY, or we get ABC, ABC, which I'm going to take this trade on the assumption that it is. Again, it can totally come down. I just want to be clear on that so no one gets upset. Elliott Wave is not about reading the future. It's about the best way to navigate the market to get the best risk rewards off potential pivot points. And if we go off my previous video, we were expecting this move right to the area that it came to. So why are we afraid of, skeletons in the closet here? So I also want to mention how this can reverse. If we make that triangle, as we can make an ABC or come down for that 5th and then make another 3 wave here. That's one way. That would be a double zigzag to end the triangle. Or it can be a regular zigzag where we just come straight down from here, up, make 5. So that's how we can fail on the triangle scenario. How we can fail with the labeling of the C is if we come back one more wave. But if we break this A wave, it does shift probabilities to the downside. In bullish markets like that setup I showed you, we usually protect this A wave low. That's why we make higher highs, higher lows. It's just a way to clear out the market for those stop hunts. This is why breakout trading isn't the best unless you're just adding on. But basically a liquidity grab. Fucks the breakout traders. And a lot of the longs get stopped out that had their stops right here. So what I'm going to do, again, I hope it comes back to this level. It's just such an ugly wave count. Obviously, there's no real good count there. Just seeing which one's closer. There's obviously no good real count here. This correction is always going to be longer in a liquidity grab like that, whether it's a wave 1 or an A wave. It's going to get extended out. So I'm going to put my buys at the 38250 and the 618. Try and aim for this area, or not even actually. Hang on, I got to measure that move. This is how we figure out our trade setup. So I'm going to pull the 1-to-1 here. So if this is an ABC, I'm going to put a buy at the 1-to-1 extension, and let's extend that out. So that's my buy zone. I'll just full buy there. It's the 1-to-1 extension if we do come down. Obviously, if we move up, we might consider we get a flat like I just showed you, and we'll have to move this pivot. But my buy zone is that 1-to-1. And my stop will be at this previous low here for position sizing at 73.8 cents. And my current buy, as long as the pivot doesn't move, is 8309. But make your own decisions. I see opportunities and I take them. That's it. I don't expect to win all the time. I'm happy with a 50% win rate and winning an average of like a 4-to-1 risk reward. That's what I always tell people. That's the better scenario. 50% win rate, get 4-to-1 on your risk rewards. You'll be a massive winner. I'm fully aware this can come down here. I'm fully aware we can come up like this and collapse. Fully aware of it all. But I'm going to take that buy. And if I get it, this is just thinking ahead, if I get it, and we just drag up sideways up between the 50 and the 618 of this down move, I will probably move my stop to break even. Take risk off just in case we do collapse down in that second 3-wave move in that triangle. All right, but I'm overcomplicating things here. Just realized we got the move we wanted yesterday. My stop was a little bit tight, but if you believe this count is correct, you make your own decision. I see pretty significant shot of high upside, which is why I'm taking it. Let's look at that risk reward if we happen to get it. That's that green line there. Stop there. If we just get the 1-to-1, that would take us 16-to-1. So another way to look at it is I have to be right in this trade 1 in 16 times to break even. I believe I'm right way more than that, but you make your own decision. All right, guys, that's it for this one. Thanks for watching, and I'll see you on the next one.